Hi, my name's John Shearman and I'm the CEO here at IV Lions Wealth Advisory. Today I'm going to briefly introduce our approach to low-cost investing. Before we start, please bear in mind that none of the material in today's presentation should be used as the basis for any investment decision. All the examples are theoretical and only being used to explain the concept of low-cost passive investing. Thanks for listening. Many investors don't have the time or expertise to effectively manage their own portfolio, and some of the most common problems that we see include paying too much in fees, not truly diversifying across asset classes and investment styles, having insufficient inflation protection in the portfolio, high portfolio turnover that in most cases involves buying high and selling low, and failing to periodically rebalance back to a target asset allocation. So if you recognise that you don't have the time to research investments for your portfolio, and you don't believe in paying high fees for performance that is usually mediocre at best, but you do believe that markets are fairly efficient over the long term, then a low-cost passive investing solution might be something to consider. Exchange-traded funds are low-cost passive investment vehicles that give efficient exposure to a variety of asset classes. So once we remove manager selection, the only decision an investor really has to make is what mix of asset classes to invest in. So let's take a brief moment to discuss exchange-traded funds. The ETF industry has grown tremendously in the last few years, and some products are now quite complicated and even actively managed. However, we will simplify our definition to the more traditional and most widely traded and held funds. An exchange-traded fund is an investment fund that trades on an exchange just like a stock. However, instead of representing a single company, an ETF represents ownership in a basket of securities that could be stocks, bonds, or even commodities. Unlike mutual funds, which are generally trying to beat market indices, ETFs are trying to replicate market indices at a low cost. So step one in our process is identifying the asset allocation that's right for you. And that really involves extracting two things. Firstly, your risk tolerance and investing philosophy. And secondly, where you're at in your investing life cycle, i.e. how far away or close to retirement are you? We then encapsulate this analysis in something called an investment policy statement, or IPS. Next, we develop an asset allocation that appropriately reflects that IPS. So at IV Lions, we like to bucket our asset classes into three categories. The green segments represent growth-sensitive asset classes, which are those we expect to do well when the economy is growing. The red segments represent inflation-sensitive asset classes, which are those we expect to protect the portfolio during periods of high inflation. And then finally, the blue segments represent lower volatility, stable value asset classes that have historically done a better job of capital preservation. So we identify the right asset allocation for you, and then we go away and implement the portfolio using a number of low-cost ETFs. Once we've implemented the portfolio, we report performance on a quarterly basis. Now we know that asset classes are cyclical and their returns are hard to predict. So on an annual basis, we like to rebalance the portfolio back to its target weights. We can see two pie charts here. The left-hand pie chart might be how you start the year, with each segment representing an ETF. By the end of the year, your portfolio might look like the pie chart on the right, where some asset classes have done better than others. So what we'd like to do is try to rebalance the portfolio back in a most tax-efficient way as possible. The annual review gives us an opportunity as well to check back in with our clients and make sure that your financial situation hasn't changed and that your investment policy statement still stands and doesn't need to be altered in any way. So how does it work in practice? Well, it's really simple. We help you set up a discount brokerage account. It's your account, You 100% own the account and all the assets in it. We then ask you to give IV Lions permission to do two things. Firstly, make trades on your behalf, and secondly, take our fee from the account, which we do quarterly in arrears. We then report performance quarterly and review your financial situation annually, making adjustments as we feel appropriate. You can cancel at any time, just give us 5 days notice. And cancelling does not close the brokerage account, it just removes our access to it. So it is very simple, and if you do cancel for any reason, the portfolio you're left with is diversified, low cost, easy to understand, and very easy to move to another advisor or even manage yourself. If you'd like more information about our low-cost investing solution, feel free to email us at info@4lions.com or give us a call on 415 272 9646. Thanks for listening.